1.1 Revenue Model and Business Operations. Boqii generates revenue through a multi-channel approach. Online retail. Boqii Mall, direct sales of pet products, contributing 57.6% of revenue 1H 2024. Third-party e-commerce platforms, sales through marketplaces like TMO and JD.com, contributing 38.5% of revenue 1H 2024. Private label products, higher margin, proprietary brands, with revenue share increasing from 27.5% to 29.0% year-over-year in 1H 2025. Online marketing and information services. Additional revenue from advertising and content services, 3.9% of revenue. The company is focused on expanding its private label offerings, increasing SKUs from 3,088 to 3,546 year-over-year, with gross margins for these products improving by 330 basis points to 33.2%. 1.2 Competitive advantages and economic moat. Platform ecosystem. Boqii has developed an integrated platform combining e-commerce with informational content, creating moderate switching costs for engaged pet owners who value both products and community. Private label expansion. The growth of proprietary brands provides margin enhancement opportunities and some protection against direct price competition, though this advantage remains limited. Market specialization. As a pure-play pet platform in China, Boqii has developed category expertise that general e-commerce competitors may not match. Despite these elements, independent analysis suggests Boqii lacks a durable economic moat. The company operates in a highly competitive e-commerce environment, with low barriers to entry and limited pricing power. The pet care market, while growing, does not provide sufficient protection from competitors. In Boqii's relatively small scale, approximately $64.6 million, TTM revenue prevents meaningful economies of scale. Table. Boqii's economic moat assessment using Buffett's framework. Moat component. Boqii status assessment. Brand value. Limited recognition beyond niche pet audience. Weak cost advantage. Small scale prevents significant cost advantages. Weak switching costs. Moderate through platform integration. Limited network effects. Limited evidence of strong platform effects. Weak intangible assets. No meaningful patents or proprietary technology. Weak revenue growth and profitability. Boqii has demonstrated concerning revenue trends. Revenue TTM $64.62 million. Quarterly revenue growth YoY minus 31.50%. Gross profit margin 21.47%. The company's profitability metrics are particularly troubling. Operating margin TTM minus 12.65%. Net margin TTM minus 11.54%. EBITDA margin TTM minus 11.54%. Despite some improvement in private label margins, the company has been unable to achieve overall profitability, with net losses of $7.57 million. TTM, return on equity and invested capital. Buffett places great emphasis on return on equity ROE and return on invested capital ROIC as measures of management and its ability to generate value from shareholder capital. Boqii's performance on these metrics is deeply concerning. Return on equity, TTM, minus 23.95%. Return on assets, TTM, minus 10.60%. Return on invested capital, TTM, minus 12.21%. These figures fall dramatically below Buffett's typical threshold of 15% plus for attractive businesses and indicate consistent value destruction rather than creation. Debt levels and financial health. From a balance sheet perspective, Boqii shows mixed signals. Total debt, $6.93 million debt-to-equity ratio, 22.7% current ratio, 4.85 quick ratio, 1.78. While the company maintains reasonable leverage levels, its interest coverage ratio of minus 9.12 indicates inability to service existing debt from operating earnings. The company's Altman Z-score of minus 12.24 suggests severe financial distress and high bankruptcy risk. Free cash flow generation. Boqii's cash flow generation remains deeply problematic. Operating cash flow TTM, $9.21 million. Capital expenditures TTM, $454,627. Free cash flow TTM, $9.87 million. Free cash flow yield, minus 112.74%. The persistent negative cash flow contradicts Buffett's requirement for businesses that generate abundant cash that can be reinvested or returned to shareholders. Table BQ Financial Health Assessment 2024-2025. Financial metric status Buffett's standard assessment revenue. Growth minus 31.50% YoY. Consistent growth, very poor profit. Margins minus 11.54% net. Consistently profitable, very poor. ROE. TTM minus 23.95%. 15% plus. Very poor. ROIC. TTM minus 12.21%. 15% plus. Very poor. Debt equity 22.7%, minimal debt, satisfactory. Free cash flow $9.87 million, strong and consistent, very poor relative. Valuation metrics BQ's current valuation multiples appear superficially attractive but must be viewed in context. Price-sales ratio 0.06, price-book ratio 0.33, enterprise value, revenue 0.15. While these metrics suggest statistical cheapness, they primarily reflect the market's assessment of BQ's poor business quality and financial distress, rather than true undervaluation. 4.3 Net asset value approach examining BQ's balance sheet components, cash and equivalents, $6.04 million. Total debt, $6.93 million. Net cash position, $889,134. Book value per share, $9.08. The company's negative net cash position and persistent losses suggest that book value may overstate the company's true economic value, as ongoing operations are destroying rather than creating value.